Good day, this is Don Vic Philip. Welcome to my trading channel. I hope you enjoy watching the video and I hope it's educative. I hope it makes you become a successful trader. Please, if you love the video, you can as well subscribe to my channel to receive more updates on how to trade on the Forex market, most especially crash and boom, synthetic indices traders. Thank you.
Good day. Today I'll be taking you on a strategy, the best strategy in predicting spikes using moving average. Please, this strategy works for all markets, not just crash and boom, but also your currency pairs. Though, if you apply it to crash and boom, it's one of the best strategy. Before using this strategy, please ensure you backtest it. This strategy has been proven to be 85% accurate. As you all know, there is no 100% accuracy in any strategy in the Forex market. You are not the broker, so you can never have 100% strategy or winning streak. Like I will always say, even in my previous videos, the aim of Forex is maximization of profit and minimization of loss. Like all other business, you must experience a bit of loss at some point. But the aim is, at the end of the day, can you end up in profit? Forex is a market that can give you any amount of money. You can come into the market, get any amount. There is no maximum, there is no minimum amount you can get out of Forex. It all depends on three things: consistency, discipline, and being time conscious. Consistency, discipline, and being time conscious. You all will be asking, crash and boom, is it not dangerous? No. Crash and boom is one of the best markets that I can encourage a beginner to start with. Trading the crash and boom market is less capital intensive. You require less capital to enter the market. You can start it as low as $10. And with this $10 market, this $10 account, sorry, you can get lots of money from it. The profit and loss margin is not high. It depends mostly on what you are trading on. Like me, I trade on spikes. I trade on spikes. I go against the market. A beginner who just enters Forex, I would advise the person to go through crash and boom, because the rate, if for example you are at a loss, you can't compare the loss to that of either currency pairs or commodity. So crash and boom remains the best market for every beginner that wants to start trading the forex market. And like other markets, it's easy to learn. You can trade the crash and boom confidently from your home if you have a good mentor and if you're willing to go through extra miles to study. Studying is one of the fundamentals in being a successful forex trader. If you spend your time studying, if you spend your time researching, wanting to know more about a strategy, you will end up being a what? A trader. It's not by acquiring or buying every strategy you see. No. But the one you are working on, is it working perfectly fine for you? Are you in profit? If you're not in profit, ask yourself those questions. What's really wrong? So I'm going to be teaching you and showing you guys how to be perfect in taking spikes, in predicting spikes accurately. In the crash and boom indices, we have markets like crash 1000, boom 1000, crash 500, and boom 500. This is an example of how the market looks like. This is a great example of how the 500 market looks like. As you can see, I'm going to the boom market and navigating to the boom market. Remember, in the crash market, if you're following the trend, we buy, while in the bull market, you sell. I'm going to show you all what I mean by that. Okay, so this is the bull market. As you can see, it has been buying for some days now. So let's go to M1. As you can see, there are more of sell candles. This is how the market looks like. They are more of sell than the buy. If you're following trend, you'll be targeting these sell candles. But if you're following buy, you'll be what targeting the spikes. And that is what I'm going to teach you. How to use your moving average to target spike. What are these moving average? Moving average are these purple, red, and blue line you see over here. That is the essence of your moving average. The last time I taught you guys about the use of EMA 200, and if we check it out in our crash 500 H4, which was the candlestick we were on before now, we would see that when the candlestick in H4 reached your EMA 200, there was a resistance. I'm going to show you the resistance that was there. Okay, is it hit? I'm going to show you the resistance. It should be in H1. Okay, yeah, it's in H1. This is the resistance. The question is, if it beats out of this point, then we are rest assured that we are going to be seeing series of falls. But if it doesn't beat out at this point, let's say it doesn't beat out, there's the next candlestick is a sell candle. You should just take a sell for long because it's going to keep on selling. See, it's still spiking. So hopefully, if before the end of the hour it beats out, then you should be seeing series of sell candles. Now I said I'm going to teach you guys how to use your moving average. This moving average, like I do talk about, works for almost all time frame, but is perfect in your M15 and M5 in combination with your D1 strategy. What do I mean by D1? Combination of D1, H4, and H1 strategy. How do I mean? Before analyzing using your moving average, you must first of all determine and analyze the trend of the market or the structure of the market at that particular hour. Let's take a look at our D1, for example, like a case study. We would see that D1 is already reaching the moving average that we are talking about. From what we see over here, we will get to understand that this market at this point in time is not stable in any way. The market here is not stable. Why is this market not stable? Because it has not what taken a definite direction. Here is more like a resistance point. Will it break out or it will fall? That is the question we are asking ourselves here. And if you notice from here, your moving average at this very point in time acted as a very great resistance. See, look at it. Whenever it reached your moving average, it kept on falling, kept on falling. When it was able to beat your moving average acted as a what support to push price up, acted as a support to push price up. When it pushed price to this very extent, the Bollinger Band pushed the price down. And as you can see how it occurred. Now, at this point in time, this same moving average resisted this candlestick. It resisted it in a very great way. And then what happened? When it passed it, it acted more like a support. Now look at this very area. It's possible for this moving average to push this thing up before the end of the day. So currently, we're expecting an unstable market today. Let's say in the early hours of the morning, which is now, it brought up this buy, while in the late hours is going to push, buyers are going to what, take hold of this market. Now, after analyzing, noticing that today will be a bit tricky, you go to your H4. If your H4 using your resistance candlestick is able to break out from this point, you should expect it to fall. If it is now able to break out from this EMA, like the previous strategy, like I told you, we should be expecting that this week is going to be series of sell because your EMA will be broken out. The same thing happened in your H1. When the EMA broke out, what happened? It kept on selling. Check your M30 as it broke out from the EMA, it kept on selling. This is your moving average. If you notice, it's really acting more like a what resistance. See, M30, it doesn't pass it. Look at it over here. From here, you see this is your purple red line. See it. It keeps on holding it. Whenever it is able to break it, it keeps on falling. So how do we use this to take spikes? If, for instance, you're trading and you notice a movement in the market, let's say using M1 or M15, you experience that your candlestick is reaching the moving average, you can take a sell at that very point in time. Let me use, for example, M1 as a case study. As you all see, when it's reaching the moving average, you if you take a sell, it gets on spiking. Now, at this very point, let me use this candlestick as a case study. When a candlestick is two or three candles away from the moving average, please ensure as much as possible to start taking trade at that particular spot. Like at this spot, after combination of your H1, H4, H4 and M30 strategy, please take trade. If you see that the trend is specific, if you see the trend is specific, please try as much as possible to take a trade. For example, here at this very spot, you can take a trade at this spot and leave it. It will still end up in what? In profit. Remember, two candles away from your moving average. Please always need to understand also how to set your stop loss and take profits, especially when you're using this moving average, just in case it beats your what? Moving average and your middle Bollinger Band. Remember, take trade two candles before your moving average. Then before closing it, you can wait like 5 to 6 candles before closing it, before taking your profit or before setting your stop loss. Please ensure you use this strategy and backtest it. As you can see, it kept on occurring the same way. You take trade here, see it kept on occurring. The same thing occurred has been occurring using your moving average. So your moving average tells you a specific point at where you take your trade. Now I'm going to show you how to set your moving average. You go to your frequency, you click, this is moving average 10, put your period at 10, put your shift 0 method, just do exactly what you see over here, then click on done. How do you add it? You add it to your main chart. Then you click what? Moving average. See it here, moving average. You set it, you click on done. I've already set mine already. You do the same thing again, click on it. You will now reset it again to this very point, this very way. Reset it, click on done. Click on the main chart again. Do this, click on done. The same thing also. I showed you how to preset MI in the past. So once you're able to do this, you will see that your moving average appears like this. We have the blue, which is moving average 48, the purple, which is the moving average 12, and the red, which is the moving average 10. They all work hand in hand to give you a resistance and support zone. Please, if you like this video and it's educative, you can as well subscribe, like, and share it. Please do not fail to subscribe to receive more updates on how to trade the forex market, most especially crash and boom, to become a successful trader. If you have any inquiry or questions, I will drop my WhatsApp number on the description section, so you can as well contact me on WhatsApp. If you need private mentorship, I do train and I do give signals to my students, so you can as well feel free to contact me at any point in time. Thank you.